Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barry Griffiths. Now today we're joined by Jay. Hey Jay, how you doing?
I am doing fantastic, Barry. Thanks for having me.
Absolutely. Well, I'm glad to have you, man. I'm glad we finally made this happen, and we're having a very good chat beforehand. I think a 40 minute long chat beforehand. It was like, well, let's start recording this because this is great. So, Jay, do you want to sort of give us an introduction into you and what you've been up to? I didn't try and pronounce your surname because I was going to let that to your second name because I'm going to butcher it. So I'll leave that up to you.
Sounds good, Barry. Yeah, absolutely. So my name's Jay Balekar, and I'm a full-time IT professional. So that's what I do for my day job. My education has been in like computer science and IT and technology. So I've always enjoyed that, but always also had a passion for real estate and never started in investing in investor or investment properties because I had a travel job, or I still do it essentially. But then COVID happened and we started working from home, and that's when I truly started investing. So I've been investing in multifamily properties since early 2020, and it's just been a fantastic ride. So we racked up a few units of our own, and now looking to work with people, do some joint venture deals, maybe smaller syndications. And really, I enjoy talking to people. I enjoy working with people. That's truly something that I enjoy within real estate, and also in my current job as a consultant. I enjoy working with my clients, and I'm just having a blast working in this real estate investment area. So
Yeah, no, very cool. And that comes across, when we were talking earlier, that this is something that you enjoy. And that's so good to hear and so good to feel, because, it's important to enjoy it, right? Because there's going to be times when it's tough and there's going to be times when it's challenging. And if you enjoy it, it makes the world of difference.
absolutely.
So how does someone from the IT world decide that real estate is something that we want to do? You said that it was something that you're always interested. What was there a family history? Was there something that sparked that interest a long time ago? What was that?
Yeah, sure. Absolutely. That's a great question. So my dad's been a real estate investor back in India. So that's where I'm originally from. Now, Indian real estate market is very different. It's kind of like the New York or Los Angeles market. It's very appreciation focused market, not so much of a cash flow market, because the loans are expensive, the interest rates are high. So the cash flow is not quite there, but the properties do appreciate quite a bit. So to give you a perspective, in the last 15 years or so, most properties in major cities have more than quadrupled. So they have gone up in value significantly. And inflation is pretty high as well in India. But because of his apartments portfolio, he's got a very small portfolio, but that's been enough to keep him on his feet and give him financial freedom after his retirement. And I've always seen that, and I've always seen good returns with real estate. The markets in India, just like here, do go up and down, but the rental money keeps coming in, and you can pay the bills using that money. So I've always seen that, and that was always a back of my mind that, hey, stocks, there would be bad times when you can't really sell the stocks because they've lost almost all of their value. But with real estate, you're going to get that cash flow and that rental money coming in month after month. So that was one thing. The other thing that I really enjoy about real estate is it gives me an opportunity to apply my creative thinking, if you will. And since my childhood, I've always enjoyed doing creative things like painting and photography. I've loved photography. Haven't had time to explore a lot of photography lately because of the job getting in the way. But those are the areas I truly enjoy. And real estate and remodeling, taking a really bad looking property, distressed property, and making it look super nice. I just enjoy that whole experience. So because of these two things, the creative side of things, and then also it being the good financial investment, those two are the kind of the key reasons why I got into real estate.
That's such an interesting point as well. I think it's so true. Like there's artistry in taking something that is just a complete mess and envisioning something completely different for that property. I think it really is an art. You know, I was talking to a flipper not long ago, and I was telling him this, like, how do you go into a place and, you know, you can envision the sink is going there and the appliances are going there and then the island will go there, because it's a war zone right now and I can't see anything, you know, from this. And it's that creative mindset to be able to do that. I really think it is a form of art, to be honest with you.
It is almost like starting with a blank canvas. And if you have a little bit of a creative mind, you will see what the end state is going to look like, more or less, right? You may improvise along the way. But if you don't have that creative vision, it's very difficult to see. Because to give you an example, my very first property, 8 units, which was extremely distressed to a point where one of the properties was actually missing a roof. And you would not even dare to go down the basement because it was all filled with cobwebs. And when I took some of my friends and relatives to take a look at the property, they were like, oh my God, like, what the hell did you just buy? Good luck. I mean, looks like you are in big trouble now. You're doomed. And what I was seeing was opportunity, but what they were seeing was what existed at that point of time, which was a mess, right? So I think having that vision and being able to see what you can do with that property is definitely helpful. And I do think that is something that comes to me naturally, fortunately. So knock on wood.
And that's interesting. So the 8 unit was your first purchase, your first venture into real estate, essentially, and multifamily. So why, you know, a lot of times when people start out, they'll buy a turnkey property, or you might buy something that needs a little bit of work, but they'll kind of get their feet wet a little bit. But you decided to go all in with this, you know, heavily distressed property. Obviously, if it doesn't have a roof and whatever else went along with it, why did you decide to go to take on that kind of project as your first one, rather than something maybe a little bit easier?
You know, everybody I talk to asks me this exact same question. So I would say, like, one, I started with educating myself, and I spent a good, I would say, almost a year going through all of these different books, from Bigger Pockets to mindset books like Rich Dad, Poor Dad, and then also like some detailed books from Bigger Pockets, also like estimating rehab costs and stuff like that, right? So I think education does take away a lot of the fear, because if you're going in uneducated, then you don't know what will go wrong. And even with education, things still go wrong. So you will never know everything about anything, but at least that education definitely helped. And then two, these books that I read always said that, hey, you shouldn't be afraid to get your hands dirty, because when you have to do a lot of rehab work and stuff like that, that's where the value is. That's where you're adding value. And at post rehab, this nasty looking property is going to be worth a lot more. So you shouldn't be afraid of these nasty looking properties. So I always had that in the back of my mind. And then also, I think third, the other thing that I've always read, and I think it's true, is when it comes to real estate, it's location, location, location. Location is very important. And now I've come to realize that location is not the only thing, but it is certainly one of the most important things. And these two fourplexes were in a very prime location, close to Oakley neighborhood of Cincinnati, which is almost like a Class A neighborhood, with a lot of really nice restaurants, and close to downtown, close to the highways. So it was perfect location. So I knew that even if I hadn't done any research, just looking at where the property was located, I knew that I won't go wrong buying in this location. Even if I have to spend $200,000 instead of my initially budgeted at $70,000, which is basically what ended up happening, I still came out okay, and the property still cash flows beautifully because I was able to get much higher rents that I had even initially anticipated. So I think that's why, I think for those three reasons, I was able to kind of get the 4 units and 8 units. Actually, initially I was looking for 4 units, but this was a property where two friends had these two fourplexes right next to each other, and they were selling as a package. So I was like, hey, I'm doing 4, might as well do 8. So I just went ahead and got those 8 units. But yeah, I mean, did get a lot of questions and looks from a lot of people that, hey, you don't even know what you're doing. You're brand new to this. Are you sure you want to take this down? Especially whenever I used to go to the building department to get permits, they were asking me all sorts of questions. Hey man, like this, you sure this is the first one you're doing? Man, you must be out of your mind. So they tried talking me out of it too many times, but I'm glad that it all worked out. So
Yeah, well, do you have any construction background at this point? Where was your construction knowledge at this point? Because obviously to take on something like this, even if you're not swinging the hammer yourself, you still need to have an understanding of all this, right? How do you feel comfortable with that?
yeah, I would say zero construction knowledge. I've tried to be a little bit handy. I've had a single family home. I don't have it now. I'm house hacking now. But back then when I had a single family home, I used to do a lot of like minor repairs and upgrades, putting a new floor in and stuff like that myself. But by no means it was major, by no means it was framing or anything like that. It was very minor stuff. But I think in terms of construction knowledge, I would say almost zero, except for a couple of books that I had read about estimating how to estimate the repair costs and rehab costs and stuff like that. But besides that, zero knowledge. But I think the only one thing that I do think that I did right was for every small piece, I got at least 5 bids. So even if it's the tiniest of tiniest things, like in let's say a $200,000+ project, building a small deck is relatively small. It's like a $5,000 job. But even for that job, I got 5 to 7 bids. So I did make sure that I'm comparing my bids and not just taking a word for it from my contractor, because some of my contractors who are still very trusted people that I work with, their bids still come out twice as high on some of these items. So I learned that lesson, that no matter what you're doing, get 5 to 7 bids and offer it to the most competitive bid who has a proven track record and recommendations. So I think that was one thing that I did, which was using that, I was able to compensate for my lack of knowledge and understanding in construction line of work. So
that's interesting. 5 to 7 bids on everything, because that takes some coordination, right? And some time and some effort, right? But it's like anything in real estate. If you put in the time and the effort, you'll get the results. Out of interest, from those 5 to 7 bids, how do you decide on what is the winning bid? Because it's not always priced, right? You might find one that is way cheaper than the other, but that doesn't mean that should be the one that you go with. So for anyone listening, how do you decide from and how do you find these guys to start off with? Do you just Google them, or do you look for referrals? I'd be interested to hear that.
Yeah, initially started looking at folks on like Home Advisor and Angie's List and people who are highly rated, but I quickly realized that these guys were perhaps the most expensive folks, because they already had a very established business, 500+ reviews. So they were doing really well. They've been in business for the last 20, 30 years. So they would pull up in a really nice, shiny looking truck, and they would have all the systems and processes in place. And I'm sure they would do a good job, but then they were not really very investor friendly. Like just for a chimney tuck pointing job, I got a quote for $20,000. So I quickly realized that that's not going to work out. So then I started reaching out to the local investor community and real estate investors on Facebook groups, and started getting recommendations for everything. So during that course of about 2 to 3 months, I probably had 10 posts in that group every day. Hey, looking for a masonry guy, looking for a framing guy. Like I was just bombarding people with recommendations, and every recommendation I would get, I would first call them, set up an appointment for doing the bid, and they would show up. And that's how I got most of my contractors, was just through recommendations from local investor community. And then how I ended up picking some of them was, of course, I didn't always pick the cheapest bid. A lot of times there was a telltale sign of that contractor having some sort of a drug issue or something. And, I wanted to stay away from those people who are just willing to do your job for $1, because I know they're just trying to get a fix. But then people who seem like they knew what they were talking about, I would kind of quiz them. I would do a little bit of my own homework and then try to quiz them and see if this guy knows what he's talking about. And I would ask the questions that I already had answers to see if this guy's fooling me or if he's actually giving me the right answers. And that's how I would kind of test the contractors and allocate the bids. And I still, because I had 8 units to work with, I split it up. For one of my 4 units, I gave contractor A And for other 4 units, I gave contractor B. That way I was able to see the quality of work for both of them. And then for all of my future projects, I knew who's the guy I want to work with long term. So that's how I went about it.
Very interesting. Yeah, very interesting. And then you said the questions you already had answers to, were those stuff you already knew, or had you asked someone else, or had you Googled it? Because if you don't know, you don't know, right? How did you have the answers to some of those questions already?
Yeah, I had Googled it and talked to the inspector. Like I had kept in touch with the property inspector. He was a great guy. He was like, hey, if you have any questions, feel free to reach out to me. And because he himself is not a contractor, he would give me unbiased view if, if this roof absolutely has to be changed or is it repairable, and stuff like that. So I would just call him up and get his thoughts and see if that actually aligns with what this contractor is telling me.
Very interesting.
Yeah.
And then from managing the contractors going forward, then how often would you go to the property? Would you be there? Because obviously you have your IT job, right? And it's,
Right.
you're working 8, 9, 10 hours a day, and I'm sure you family life and everything else like that. How much time were you spending at the property? How were you oversee? Because that's the thing, right? Is with a lot of contractors, if you let them get away with stuff, they'll do certain things, right? And you need, well, the cat's the way the mice will play, essentially, right? So how did you oversee it, and what kind of systems and operations do you put in place to make sure everything was a success?
Yeah, that is absolutely true. And I wouldn't say I had the best systems and processes in place early on. And it takes time to even build that trust and relationship with your contractors, because you don't know which contractor is trustworthy and who's going to run away with your materials. So it was a lot of hard work. And fortunately, because I was working remotely and because I work in IT, I don't have to be physically in my house or in my office. I can be working from my car. So that's what I did. I was on site almost 5 to 6 hours a day working out of my car. So that's what I was doing. I was just doing drive-throughs and eating Chick-fil-A's and working out of my car. And every time a contractor had a question, I would just step out from my car in between my meetings and answer the question and keep an eye on how the project is going, keep an eye on the materials and stuff like that. So I was extremely hands-on in the beginning. A lot of people I speak to, they may say that, hey, you don't need to be this hands-on and learn to delegate. But it was my first project. It was all of my money. And I wanted to make sure it absolutely goes right. So I was there almost all the time working out of my car. So that's how I did it. But after I formed that relationship with my contractors, now for my next project, I've not been that hands-on. I just go maybe twice a week, but that was about it.
Very interesting. And I'm sure you learned a lot during that time as well from being on site and seeing what they're doing and able to, and it builds a base at that point, right? And builds your understanding, and you get a trust with the contractors, and you've got to keep an eye on stuff. Like you said, especially if it's your money or if it's investors' money, it's the same thing, right? You've got to be so cautious of where that money goes, because in a project, money will run away from you very quickly. Stuff can, you think it's a few hundred there, a few hundred somewhere else, but that soon adds up into thousands and thousands of dollars. So you really got to make sure everything's going where it's allocated.
For sure. I mean, if it was my investors' money, I would probably just live there because that would be even more scary. Yeah, if I didn't have any systems in place and it was somebody else's money I was dealing with. And that's why I was not even willing to use anyone else's money for my first project, because I knew there were a lot of uncertainties. So I didn't even ask my parents, my relatives, nobody. Like it was important to me to kind of just do it right with my own money. And then if it goes well, then start talking to people about it.
What was the end result of that property? Did you sell it? Did you refi out of it? What did you end up doing with that?
No, we still have that property. It's cash flowing beautifully. My tenants are phenomenal. They're great people, and I self-manage that property. But because my tenants have been so awesome, it's a zero headache type of a property for me. And because everything is fixed up, I barely have any maintenance issues. So we still have the property. We did do a cash out refi. Unfortunately, when we did the cash out refi, we were smack dab in the middle of COVID pandemic, and banks were extremely conservative at that point. So although I got a phenomenal interest rate, the LTV requirements were crazy low. So I got a 65 LTV on my cash out refi. But even then I was able to pull most of my capital out, but I still have some money stuck in that property. But as long as the property cash flows well, I don't mind it. And I converted one of the units to Airbnb, which is doing even better than my other rental units. So that was one thing that I wanted to try out. So I converted one unit to Airbnb using some of the leftover furniture I had. I was like, oh, I might as well just throw that furniture in there and make it an Airbnb. And turns out it's 100% occupied all the time with Airbnb. So that has been a good experience too. So that's where the property is at today.
How cool and how interesting. Yeah, Airbnb is on fire right now. Short-term rentals is, oh my goodness, it's something we're seriously, me and my wife seriously looking into, is because it's such a cash flowing monster, right? It's just crazy the rates that you can get per night and per month, and it's just so most good ones are fully booked now, so it's definitely an interesting concept. So after you did that 8 units, did you go wait till you fully finished that, or did you start other projects while that was still going on? What was next for you doing your real estate endeavors?
Yeah, I did not start really looking at other projects while I was finishing up my 8 units, because until it was actually rented out at my target rents, or thankfully we were able to rent it out over my expected target rents. But until that had happened, and until the cash out refi happened, until I went through that entire circle of the BRRRR journey, if you will, by what is it? Buy, rehab, refinance, rent, refinance, repeat. Until I had gone through the entire process, I didn't want to touch other properties and take even more risk. But after I had proved that the BRRRR method works, then I started looking at other properties. In the meantime, I was still keeping an eye out on other properties. And there was one property, a 10 unit, that came on the market. And I was like, oh man, I wish I was in the market to buy this property right now. But I wasn't in the market to buy at that time. So I let that one slide. And then this 8 unit project completed. We did a cash out refi, and lo and behold, that 10 unit that I had looked at was back on the market. So I'm like, oh, perfect timing. And that's when we made an offer on that 10 unit. And after some back and forth negotiations, we were able to close on that 10 unit. So
very cool. And the cool thing is, this interview is going to be 2 parts. The second part of this interview is going to be solely focused. We're going to do a deep dive into that 10 unit, because that's still a little bit ongoing, even though you finished, right? You're still in the lease up phase a little bit, I believe, on that one. But I've seen the videos on that and a lot of stuff on that, and that's a really cool deal. So we're going to do a deep dive into that. So everyone should stay tuned for the second part of this interview and listen to that deep dive into that 10 unit. So you did that 10 unit, and like I said, we'll cover that a little bit more. But that was a heavy value add property as well, right? It needed soup to nuts, pretty much, right? You needed everything on that one. That was another heavy. Is that kind of your business plan on properties going forward, to find something that is heavily distressed, or is that changing as you're going forward?
Yeah, I mean, I've realized that these deep value add, heavily distressed properties, they are a lot of work, and it's definitely worth it once you have stabilized the property. But they're worth doing if it's slightly smaller, anywhere between like 8, 10 to up to 20 units. But this type of a deal, if you're buying 100 units or 150 units, it's extremely difficult. It's very high risk. It's high risk for investors. You're not going to see any cash flows for the first 2 years. And I don't know any passive investors who would be okay with that. So if it's a smaller deal, I don't mind taking on another challenging deal like that. But for slightly bigger deals, I'm looking for still value add deals, but probably in the range of, where the condition is still livable, and you fix it up by putting in maybe 7 to 10 grand per door and raise the rents. So that's really the ideal criteria of deals that we're looking at currently.
And
like everybody else's. So
yeah.
it's no different.
Yeah. Well, there's a reason behind that, right? Because it's most people are doing that because it's what makes the most sense, and it leads to a lot of success for people.
Right.
That you currently have a deal. Are we able to talk about the current deal that you have that you just did due diligence on?
Sure. Yeah, we can. I can definitely talk about the deal kind of in general terms.
Yeah.
It's not closed yet,
Okay.
so I don't want to get too far ahead of
Yeah.
myself. And
Absolutely.
so this is a 30+ unit deal in Cincinnati, in a nicer part of Cincinnati, which is upcoming. It's in the path of progress, and that's typically the areas that I like to target. I like to target the areas that are upcoming, that are developing. There's a lot of new construction in the area. So we were able to find this through a broker relationship. The broker knew the family, and I've been talking to this broker and my partner. This is a JV deal, so I'm doing this with a partner based out of Texas. Me and my partner have been talking to this broker for quite some time now, and he thought that this would be a perfect deal for the two of us because it matched the criteria that we had told the broker. So I think one of the things that I would definitely like the listeners to know is whenever you're talking to brokers, it's very important to clearly articulate your criteria, because that way when a deal matches the criteria, the brokers are going to get that deal to you, and you probably would be able to close it. Otherwise, the brokers will send you these deals and you're not able to close on it, and they think you're just wasting their time. So because of all of that, we had built this relationship with the broker. He brought us this deal. It matched our criteria. The pricing was right. I live in the neighborhood, so it literally is a mile away from me. So I immediately went the same evening. I saw the property. I was like, oh, this property has a lot of potential. And I was just behind that broker, because I'm sure the broker probably sent this to at least 10 more people. That's just how it is. But I was immediately on his back that, hey, I already taken a look at that property. I love it, and we're going to close on it. Just work with us. So after we had instilled that confidence with that broker, he was more than happy to work with us. He got us in touch with the owners, and then we just took it from there. We just recently finished the due diligence. We finished the inspection process, and just 3 days ago got the deal under contract. So this is not a very heavy lift. It is one of those deals where we probably will put in about 10 grand per door. From a syndication standpoint, I think 10 grand a door is still a pretty high number, because I know a lot of syndicators, they would just put in 3 or 4 grand, fix up the paint and flooring, and call it a day. So this is still a pretty extensive rehab, but once it's all done, we do think that we can raise the rents by at least 50 to 60%.
Wow, that's a nice little rent bump there, 50 to 60% rent bump. Yeah, that's really cool. With the with the property like this, it's a little bit of a jump, right, from 10 units to 32 units, but it's still kind of in your wheelhouse, right? It's not going from 10 units to 100 units. So I'm sure it's an exciting project, and I'm sure you guys will have a lot of success. So cool, man. Well, cool journey, cool stuff. Cool. You got a lot of cool stuff going on, and I'm sure a lot more to come as well, right? It seems like you're just getting started, and the real estate bug has just bit you, right? I love how much you enjoy it, and I can tell from that. So
it's hard to turn back once you embark on that journey, and if you really end up enjoying it. Some people don't enjoy it. They go over budget, and they would be like, this was the worst experience of my life, dealing with contractors and all that. I don't ever want to do it. And that's totally fine. You can invest passively and still enjoy almost the same benefits of real estate investing. But I truly enjoyed the process, and I don't see myself stopping anytime soon. So the goal is to really grow organically and do some of these medium-sized deals, and then start looking at larger deals, because I don't want to bite on more than I can chew. So
cool, very cool. Well, are you ready for what I'm calling the knockout round?
Yeah, let's do it.
Cool. So what would your wrestling name be?
Oh man, so I don't know if this counts because this name is already taken, but I would be the undertaker because I like to undertake deals. So I don't know if it's a valid answer because the undertaker is already a popular wrestler.
No, he's retired now, so you can be the new Undertaker.
Okay.
He's retired now, so
Okay.
there's room for a new one.
Okay.
So every
Sounds
wrestler,
good. Yeah, I would love that name.
so the Undertaker, Jay the Undertaker. So every wrestler has a special move. What is your special move in real estate?
Well, I would say, get her done. I like getting things done. I think that's probably my special move. I wouldn't say that I just like, executing on projects, or I just like raising money or something like that. What I've seen is actually tradition, in my past, I have struggled a little bit with time management and being a procrastinator. But now after I've started real estate, I've realized that all of my time management troubles or procrastination to a good extent has gone away, because once you truly enjoy doing something, and if you truly want to do it yourself deep in your heart, and it's not your boss telling you to do something, you just get things done. And that motivation is coming from inside. And I think that's probably I would say the best move, just getting things done, because I'm just enjoying it in real estate. So
That's great. That's great. What's been the biggest body slam you've taken in real estate?
yeah, I think I've more than one for sure. I think a couple that I can name immediately right off the bat are my first project, 8-unit rehab. My initial estimate for rehab was 70 grand, and we ended up spending 210 grand. So 3 times as much. Because when you have no background in construction, like I just said, I had no background. Everything seems simple because you're like, oh, you can just throw a coat of paint, or you can just throw some flooring. But what if the entire subframe is rotten? You got to reframe the whole structure, and now you're looking at 3 times as much. If you don't know electrical, you don't know it's going to cost you actually 50 grand just to rewire the whole building, because you just found out insurance is not going to insure this property because you've got knob and tube wiring. It's a fire hazard. So all of these surprises, there were a lot of surprises. So, but going in, I knew there are going to be surprises. So I had a huge line of equity, HELOC, home equity line of credit, and that's how I funded my rehab. So although my rehab budget was 70K, I had a $200,000 plus HELOC. So I knew I had prepared myself for those surprises. So although it was a big body slam, if you will, thankfully I didn't go bankrupt due to that body slam. I think that was one. And let's call that as the biggest body slam that I've ever taken. Yeah.
Yeah, that's a pretty big one. But thankfully, like you said, you were prepared and you had things in place to help you. And I think you mentioned earlier that you got most of your capital back out of that one. So it kind of worked out in the long run. Now you have a great cash flowing asset. So it worked out in the end, right? So was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Yeah, no, that's a great question. And that still happens, right? That still happens every day. Because whenever you're trying to step out of your comfort zone, that happens, right? Like even being on this podcast, Barry, although I love and enjoy speaking with you, being on podcast or being in front of camera, that has always intimidated me. So that's one example. Similarly, going after that 8-unit, which was a relatively big project as a first project, that made me feel like I'm standing on a cliff about to jump. But I think, again, it comes back to education and motivation from friends and people whose success stories you have read. And they tell you the same thing. Hey, you just got to take that leap of faith and trust your instinct and trust the education that you've gotten. Like very recently, writing LOIs on bigger properties. Like I know that I don't even have 1% of the purchase cost of this property, and I'm writing LOIs for $5 million properties. So that is a huge leap of faith. You just have to get comfortable with it. And I think these are just few examples. And every day I come across something where I just have to get out of my comfort zone and just take that leap of faith. and see what happens, right? If you put down that LOI and not able to get the deal under contract, that's still fine. It's not legally binding. Yeah, you're going to burn that relationship with the broker. And hopefully I don't have to do that. But unless you do that, how are you going to know which deal you're going to get under contract? So you just have to go ahead and do it. So.
And I think real estate investing is that, right? It's that constant jumping off that top rope, because there's stuff, you know, every day or every week or every month that challenges you and pushes you, and you know, you'll be scared to do it, but you've just got to keep doing it. Like you said, you've just got to keep taking action and keep jumping.
Yeah, absolutely.
Well, cool. Well, Jay, thank you so much, man. This has been a fantastic conversation. Really enjoyed it. If people want to get in touch with you, people want to reach out to you, what's the best way for them to do that?
Absolutely. I'm very active on LinkedIn by my first name, which is Jaydeep. I know it's hard to pronounce and spell. Last name is Balekar. I'm on LinkedIn by that name, and on Facebook, also very active. But I also have my company website and a company page, Compounding Capital Group. Very active there as well. So if anybody wants to reach out, they can check out my company page on Facebook or my website.
Very cool, very cool. Well, everyone stay tuned for part 2, where we're going to do a deep dive into that 10 unit. Thank you, Jay.
Sounds great. Thank you, Barry.